This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome, and this is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 7/7/20. This is show number 70. A lot of sevens there, Nick. And, well, the market, just like you anticipated, having a little bit of a pullback, right?
Yeah, it seems like every time we get a nice surge on Monday, we pull back kind of the next few trading days. We do some backing and filling, and that's kind of what we're seeing today. In fact, if you look at the financial stocks, which held up pretty well yesterday, they were okay. Today, they're all lower, and that's one industry group I'm always keeping a close eye on. And then we have retail down a little bit today. Energy stocks are pulling back a little bit today. The one strong horse out here is technology, and that's really led by Apple and Google and also Microsoft. Some semiconductors are doing okay. And that's our market wrap in a nutshell, really. It's just what we talked about yesterday.
Well, one thing we should discuss is Tesla. It's trading right now around $13.70 per share. And when you look at that chart, Nick, you know what's coming over the hill there.
Yeah, Tesla's gone parabolic, and again, it had a big inverse head and shoulders on there, telling me that there was going to be a move to 1400. It got to 1400 this morning on a gap up, and now it's faded. So the move for Tesla probably is over for now. Traders will now have to watch the pattern and see if they can work off the overbought condition and see what kind of pattern it makes. But the trend is still up, but it's still extremely overbought at this stage of the game.
Yeah, have you seen all these short sellers who have literally taken it in the shorts and gone bankrupt over this stock?
Well, there are still a lot of big short sellers in there, like Jim Chanos and big hedge fund guys like that. I believe David Einhorn may also be a short in there as well. So, it's going to be interesting to see if these guys will ever capitulate and get out of their short position, because they've been absolutely slaughtered. And you're talking about billion dollar hedge fund managers. So that's going to be the interesting take. But the small guy, yeah, I could see him getting squeezed out. That happens all the time. That's probably what's gone on now. They'll get margin calls and everything else, and they'll have to liquidate. But it's going to be interesting to see if the guys like Chanos, which hold their conviction so strong, I mean, he's been out there since the stock was under 400, basically saying it's going to go under, and here we are at 1400, and it's pretty interesting to see how that all plays out.
And look, I'm not necessarily a fan of the stock. I think it's totally distorted, and it, what do you call these? The flavor of the day, the fancy.
Yeah, these are the darlings of the market. These are the so-called, hot money or hot stocks, and that's you always have to look at these so-called market darlings. That's really what they are, and then they're going to make those moves. And this was a good chart pattern to get to 1400. It did what it was supposed to do. Charts don't lie. Now we'll see how it plays out over the next couple of weeks. But I think probably the stock has to pull back from here somewhat.
Yeah. Well, then again, if enough suckers get on board, they could push it even higher. It just reminds me of Bitcoin's chart. Every chart I've ever seen of a parabolic move like this for every stock, commodities, etc., there's always a day of reckoning, and there's always the other side of the parabola.
Yeah, they always end the same way, and that's why we watch chart patterns, because history repeats itself, so does the chart pattern. It's really a footprint of human nature. Right now you got euphoria going on, and it's not just Tesla. You could look at NIO, which is a Chinese electrical vehicle maker, and that's the same exact chart as Tesla right now. So, that's an $11 stock. It went over 12 yesterday. But think about this. In April, this stock was about $2 and just went over 12. So you've seen all these parabolic moves going on. And, anytime you get that, the froth is in the market. You got to be real careful now.
And that's not to say that Tesla as a company is not going to be successful. they're not going to sell more and more cars and take over the auto market globally. They might very well do that, but it's capital goods. It's a manufactured product. It's cyclical right now because they're unique. They're kind of defying the cycle where all the other manufacturers are seeing their sales decline, auto manufacturers, but Tesla is seeing them go up. It reminds me of an analogy here I can use. When casino gambling was legal only in Las Vegas and some islands, and then they legalized it in Atlantic City. Atlantic City really took off. And then they legalized it in Mississippi and Louisiana. And then before you knew it, it was legal all over the country or in most places. And it's no longer unique, and it's no longer a big deal. And now the companies just trade based on what their earnings are. And I think we're in that phase of Tesla where there's just restricted supply and much more demand. But how long will that continue for?
Yeah, it's a great point. But you got to think about it right now. It's like you just said, it's the hot topic. It's unique. It's being traded as a tech company as opposed to a car manufacturer. So, at some point the market will look at it and they'll say, okay, is Tesla solar panels, SpaceX, or are they a car manufacturer? Maybe they come to a conclusion that the market will say, we're gonna say it's a car manufacturer, and then you'll see the PE ratio get more in line with a car manufacturer as opposed to a tech company. But right now it's being touted as a growth stock, and again, growth stocks, they have these explosive moves. Just take a look at Sun Microsystem in 1998, 1999. Think of those kind of stocks, and then it's the same thing, and then the stock will come back to reality at some stage of the game.
Yeah, that's for sure. And speaking of reality, the reality of gold and silver is they're going up.
Yeah, there doesn't seem to be really any stopping gold and silver right now. And I've been, kind of hoping that there would be. But today, if you take a look at gold futures, we're over 1,800 an ounce, 1,806 at the moment as I speak. I'd like to see us settle in here or pull back or consolidate. I do not want to see a parabolic move. I've said that before. But again, the fundamentals behind gold are there, and that's why it continues to just stay up so much.
Hey, and that is a great point, because when we see parabolic moves, it doesn't matter whether it's gold and silver or Tesla. It's always going to be the same outcome. What I thought was really interesting, before the COMEX opened up this morning, gold was down over $10 an ounce, and silver was below $18. And then I went to the post office, ran some errands, got my Starbucks. I came back, and all of a sudden gold's up over $10 an ounce and silver's up. So we had that reversal, which is pretty bullish, a bullish statement, isn't it?
Yeah, I mean, that's where the money is flowing right now. And again, you have central banks around the world printing money, unprecedented amounts. So it's understandable why there's a bid in gold and silver at this stage of the game. The chart pattern, I really wish we would consolidate more, because then I think the move to the upside would be a lot more sustainable and a lot more vicious. Right now, though, we just keep creeping higher every day. So, again, nothing wrong here. The monthly chart is a little bit stretched from my liking, but, the trend is very, very strong in gold and silver.
And so our mining stocks here are GDX, GDXJ. What are we looking at there?
Yeah, so GDX today is up about 49 cents, which is a gain of 1.3%. It still has not broken out of its high from May. The high in May on GDX, which was 37.49. Right now we're trading at 37.33. So we may stall around here a little bit, I think. But again, I'd like to see this pull back. If you look at the monthly chart of GDX, it's just like the monthly chart of gold, very extended, bit overbought. You want to see some backing and filling, and then you'll get an explosive move in the gold miners and the junior miners for that case as well.
Yeah, well, if it just stays where it is till, say, fall,
it's perfect.
Stops going up, that'll be okay too. It doesn't have to go down.
Absolutely. It doesn't have to go down, just has to go sideways. We just don't want to see it run right now and take off, because then it'll get parabolic and then it'll come with a big correction, which is fine too, because if you get that move, it'll shake out a lot of the weak hands, and then you could pick the pieces up where they fall, as long as you know where to do it.
Hey, and long term, it's going to go where it's going to go, and nothing is going to change that. But fits and starts and pullbacks and all of that stuff is just normal because the sector is so volatile. And then you go to like your junior miners, which the GDXJ doesn't really even reflect so much anymore because they re-upped that index. So they revised it so it's bigger companies. But these junior miners, some of them are on fire. And luckily they're companies that I work with. And I actually own some of their shares, but they've been like unstoppable. So, and the other thing is summer is doldrums generally for the metals market. Although not last year, and it doesn't look like it's going to be this year.
Yeah, when you think about the GDXJ right now, that's already testing its 2016 top. So, talk about the move. That's actually leading. The junior miners have been the leaders. And, they're testing the August 2016 highs. So, it's been very, very bullish. I mean, since March, these mining stocks have all really have just had blast off type moves. I'd like to see pullbacks here, but the trends are up in everything.
Hey, Nick, when we go back to March 13th, the GDXJ hit its low of 22.17. Now it's 51 and change. That's a way bigger move than the actual price of gold saw during that time.
Yeah, that's what I was just saying. It's leading. I mean, and now you're up into the August 2016 high. So just think of, that's gone not quite parabolic because you had a really good pullback recently. You had like a nice 1 month, 5 week pullback going into early June 15th, and then it really blasted off again. But that kind of move tells me we need to consolidate now. And if we do that, there's a lot more upside in all of these gold stocks, gold minings, and junior gold miners too.
And yeah, like obviously this is not just a relief rally or a snapback because it's gone to a new high, right? I mean, we're looking at a trend here for sure.
Oh, the trend is up too, and that's a powerful trend as well. Like I said, the only thing you don't want to see if you're in this for trading purposes, you don't want to see it to go parabolic. You want to see it consolidate. And if it does go parabolic, yeah, it will have a sharp correction. And then, you'll still be able to, the move is not over. When you have this kind of move, it's not over by a long stretch. If you do get a parabolic move and a sharp correction, then you'll have to pick it up again where the market tells you to get in. And that will require some math and some chart knowledge. But again, it's one of the strongest, if not the strongest, commodity out there right now.
Yeah, and the chart is really fascinating because just look at the GLD chart from its March low. Its March low was March 19th, and it was at 138. But then it's just creeping up sideways there. It's very uncharacteristic for gold and for commodities in general to have these sideways upward creeps. They usually, when they take off, and it's just like smooth upward trajectory. It's fascinating to look at it.
Well, when you look at the daily chart, there's nothing wrong there. And the trend, it's not even overbought in the daily chart, the GLD. But when you look at the monthly chart, it's getting stretched. And that's, where you got to be a little bit careful. You got to be able to look at these time frames and decipher between them. And that's kind of what keeps me out at the moment. But,
right.
When gold was at the lows, I was a buyer. So, when it crashed on I think it was the 16th or the 19th of March, I was all over it. So, we made tremendous money there, quick too. But now I'm just sitting back and hoping we get some kind of a pattern.
Yeah, interesting times, that's for sure. Hey, any sectors you're paying particular attention to right now? I think energy you're kind of focusing on.
Yeah, I'm watching energy. I think some of them still have a little bit lower to go, but that's an area I'm watching. And I'm watching the hotel stocks. Yesterday I got out of Hyatt. I made 8.8% on the second half position there, total of over 7% in the position. And then I got out of my Las Vegas Sands call options, and I made over 22% there. So I'm going to keep those on the radar, but I have levels for both, and I like them both still going forward. So I'm going to be really watching these hotel names. I think that's where you can make some money.
Well, I'm going to be watching these hotel names too, because this weekend I'm shooting off to Vegas. I was supposed to go to a conference, Freedom Fest. Of course, the bureaucrats in their finite wisdom canceled it, even though it was social distanced and everything else. I guess they just didn't want libertarians invading Vegas at this particular moment in time. But I'll give you a first-hand report of what's really going on there, and the airline stocks too.
Yeah, I'm looking forward to hearing all about your trip there, and I'm looking forward really to see what the airlines are doing. I've been getting reports that the flying is starting to pick up in a big way, so it'll be interesting to see what you say.
Yep, yeah, and you know what's really nice about them getting slammed? You can change your flights for free. They no longer nickel and dime you $50, $100, $200, and you know, they're going like out of their way to try to get you to fly. And that's a great thing because, man, they've taken advantage of the American public for a couple of decades now. It's about time they realize they're in the customer service business.
Yeah, I agree with you. The service flying an airplane is much, much different than it was 20 years ago. So maybe now, you know, they'll appreciate the customer.
Yeah, well, they should, because they've been without that little necessary component that isn't just a digit on a spreadsheet. It's a human being that's pushed into and crammed into a space that you wouldn't put your dog in, and riding in filthy planes, paying nickel and dime for your luggage, for your changes, for everything. And it's about time they got a dose of reality and understand that the public, you can't take the attitude of John D. Rockefeller, the public be damned, because this is a market and people can always stay home.
Well, you said it pretty much picture perfect. And I think people have stayed home. So if these companies want to stay in business, they need people to fly again. And hopefully the airline business will pick up soon. Hopefully this coronavirus will be behind us. And, we'll see how it goes. But, the airlines are now on my radar again for another trade. So I'm watching them closely. But I like the hotels actually at this stage of the game, especially after my little weekend 4th of July trip. Yeah. Hotels were slammed. They were doing great business. And that's good to see.
All right. So I guess we'll leave it at that. So keep an eye on gold and silver. See, it could just kind of peter out and just kind of trade in a range. But probably by Q4, we'll see another takeoff, maybe the end of Q3. But Q4 seasonally is the time. Interesting thing is that in China, jewelry demand has cratered. But that demand for gold has been more than made up for by the ETFs, because as more people buy shares, they're open-ended, they have to buy more gold in order for these shares to theoretically be backed by gold, which we could debate about. So interesting times. Anyway, that's it for now. Make sure you take a look at inthemoneystocks.com so you can see Nick's full trading record. A lot of useful info there. The Twitter feeds are at ITMS, at Nick Santiago01, and at Kerry Lutz. Questions or comments, we want to hear from you. Just email us KL@KerryLutz, KL@KerryLutz.com. And Nick, we will pick up where we left off tomorrow. This concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. For more information, go to inthemoneystocks.com and see Nick's full trading record, or check out the Twitter feeds at ITMS and at Nick Santiago 01.